I'm Tara Joseph, looking at the week ahead in Asia with Wayne Arnold of Breaking Views, and we're in China Congress Party mode. We've got more days of that. In the end, we get the new leadership lineup. What's the takeaway going to be for investors?
I think for investors, the takeaway is already here. We already sort of know who is likely to take that stage on the 14th or the 15th, and it's going to start hopefully with Li Keqiang and Xi Jinping on top. And that means that these are two people who are reformers and will lead China forward into this sort of a new consumption-led economy. Now, the question is, how many fellow reformers end up on that standing committee, and how much more of a mandate do they get in terms of leading that economy forward without a lot of noise and pushback?
Okay, so you're talking about symbols or new leaders, but is there any real change or anything for investors
to grab
bite
onto?
into?
I think that, well, that's what I say, is I think most of this is already scripted. So the real question is, are there any surprises? If someone doesn't end up on the stage that should have been there in terms of reform, either one of the two Lis or the two Wangs, then we have a problem. It means that something went sort of wrong. And that might cause people to get a little bit have some question marks over the future. Basically, I think for the next year or two, we already know what's happening, that China is going to tolerate a certain amount of slowing down in order to shift the economy away from exports and investment and over to consumption. The question is how much, how fast.
It is so scripted, and yet some people are saying it will be scripted until there's a major storm. Is that realistic?
I don't think so, no.
All right, let's move on to the other things that we're expecting.
Yeah.
FDI from China, foreign direct investment into the country.
Yeah.
Are we going to see any signs of change at all?
Well, I think there's actually going to be some good news on FDI in the sense that I think it's going to come back into positive territory. This is shrinking because the outlook for China was diminishing. And we're going to get a base effect, I think, where the money does start to come back in. There were some positive signs in September, you'll remember, on exports. I think that's going to continue a little bit because the U.S. is slowly and gradually starting to pick up, despite what's happening in Europe, despite Japan. I think that's going to feed into FDI.
Japan, GDP.
Right.
We've been ignoring Japan.
Yeah.
Big economy. It's also the China factor. People say those tensions are sort of leading to a slower economy.
That actually, I think, is having less of an impact than the natural slowdown in China is having on exports. And remember, Japan isn't really so dependent on exports, but it is a big deal. And Japan, obviously, the economy domestically not doing that well either. So I think we're going to see slightly negative growth for the in the next week when it comes out for the next quarter. And I think it won't be as bad as people are expecting. I think that the U.S. economy is going to start pulling the trade figures back up. I think the spending numbers are going to start looking pretty good. I think it's going to be negative. I just don't think it's going to be as bad as people think.
We shall see. We'll get past China and focus on Japan again.
Okay.